Hi everyone. Can everyone hear me? Good to see everyone here. If you can hear me, can you type yes? I'll just wait for the rest first. Hey, good to see you, Josh, Joe, Edward. Hi, Mei Shan. We wait for a while, wait for the rest to be here. Okay, then we will get started. Keepers, yes, I remember you. Hi, Jonathan. Okay, we'll start in 3 minutes. Okay, start in 3 minutes. We will wait for the rest to come in, and then we will start. Meanwhile, I don't have music. Okay, so y'all can y'all don't want to hear me sing, right? Okay, so let me just wait for the rest. Welcome everyone. Jefferson, I think I met you this week. Okay, so before I start, let me just set some context so that everyone is on the same page. Whatever I share with y'all is for education purpose. It's not advice to buy and sell, okay? I need everyone to agree on this because when I do this, right, sometimes it's quite risky, you know, talk about stocks and things like that, it's quite risky. So I need everyone to agree on this. You know, whatever I share with y'all is for education purpose. It's not advice to buy and sell. If you want to buy and sell, I think please go and do your own homework. Do you all agree that this is for education purpose? If you agree, type yes. Please everyone type yes, because if not, later I will get into trouble. Okay, so can you all agree? If you all agree, type yes. Thank you. Appreciate. Please type yes so that we are all on the same page. Okay, we will not like later. Oh, Colin asked you to buy this, you know, lost money, you know, handle for me or some other things. Even though I'm not licensed, you know, but I just want to be safe. Okay. Good evening. Okay, Jonathan. Okay, good to see everyone here. Wow, just now got a big announcement, right? Okay. Hey, Brian also here. Okay. So agree, yeah? Okay, so whatever I share is for education purpose. Second thing, you know, because we don't know who is in this Facebook Live also, so they may type ridiculous thing, or comment ridiculous thing. Can I have your permission that if they talk ridiculous thing or ask ridiculous question, can I have your permission to remove them? If you agree, type yes. I need your support, okay? Because I don't want to have funny people disrupting the whole flow of the webinar. So if they disrupt us, disrupt me, or disrupt all of us in doing this webinar, I will remove them quickly. Okay. Thank you for doing this for me. Okay, I appreciate it. Okay, last one is whatever I share with y'all. I hope y'all, even if y'all don't buy and sell, at least y'all go and take action. Okay, look at the charts, go and see going forward. Okay, whatever I talk about going forward, how it play out. From I'm saying, please don't take whatever I talk about and that's all knowledge, you know. But go and test it. Go and test it. Go and apply it. You know, take some action to it. Okay, because if not, it's just knowledge not applied. Can you all agree? Okay, you don't need to trade the thing, but at least you test it, see whether an idea come out profitable or not. Do you all agree? Or to take action? If you agree, type yes. Okay, I'm just three yes. Okay, so if you type yes, I'm gonna start. Okay. Okay, so again, we'll cover three parts into this webinar, which I always do with my graduates. The first part, I will talk about the market first. I'll talk about what's happening in the market. You know, yesterday the market dropped. You know, then this morning, when market opened, then recover about almost 1%, and then right now it's dropped, and then now it's flat again. So it's very, very volatile. Okay, we want to look at the market first. Okay, what is happening to the SPX? What do we do from here. Okay, so I'll look at the SPX CFD. Okay, that means CFD includes the future right now. That means the futures price right now. Okay, so this will be the CFD of the market right now. Okay. So when I look at the, let's go into my daily charts. Okay, so the context, we will set the context again. Okay, you all can see the screen, right? So there are a few ways. Today I won't go into so much into the traders GPS, into the system. We'll just share with you all simple things that you can use and apply, okay, for yourself. And then okay, let's do that. Okay, so one of the things you can use is this indicator called GMMA. Okay, it's a free indicator that is available in almost every charting software right now. Okay, if you don't have a charting software, you can go to TradingView. Okay, because right now, well, maybe have flop public, right? TradingView.com, TradingView.com has all the charting tools. Okay, if you want to go and look at the charting tools, you can go to TradingView.com and you can look at what's happening to the market. Okay, so what I want to plot is the GMMA. Okay, this indicator is called the GMMA. Okay, GMMA. Just gonna search GMMA and you can find this indicator. And I want to share with you how you can use GMMA to determine the trends. Okay, whether the trend is uptrend, whether the trend is downtrend, and why? Because the trend is your friend. Yes or no? Do you all agree the trend is your friend? Okay, you want to trade with the trend. If you agree, type trend is a friend. Okay, okay, trend is a friend. Don't go against the trend. If the trend say up, you buy up. If the trend say down, you short it. Okay, so that is the main thing. You don't fight against the trend. If you agree, type in trend is a friend. Okay, so let's take a look at this right now. Okay, let's take a look at this. So this is the S&P 500 chart. Okay, I'll go into the weekly charts. Okay, so the weekly charts will give us, thank you. Okay, trend is your friend. Huh? The weekly chart will give us big context. Okay, big context. What is happening to the market on a bigger context. That means I want to look forward to the next, let's say the next half a year. I want to look forward to the next half a year. I want to see where is trend going, and I want to know. Okay, thank you. Okay, trend is a friend. Okay, so I want to see where the context is right now. Okay, so this is the global financial crisis. I just want to share with you all. For those people who have never been through a crisis before, okay. When it was in the crisis, right? When during crisis time, I think Lehman Brothers was somewhere here. Okay, Lehman Brothers was somewhere here, and then after that, the market continued. After that, the market continued to correct, right? Everything in the newspaper talking about end of the world, end of the world kind of thing. That means like apocalypse, They're talking about the end of the banking system, That is like 11 years ago. They talk about, in 2009, they thought, oh, Lehman Brothers has collapsed. There are many bank run, and the whole banking system is going to collapse soon. Okay, during that period of time, it's like that. Okay, and people are very fearful. Yes or no? People are very fearful of the market. Okay, because they're afraid that if the whole banking system collapse, even the money they put in the bank is no use. Okay, even the money they put in whatever is no use. During then, that point of time, there were no price. Okay, because normally market has prices, right? We have like what's the bond price, what is the stock price, and things like that. So during that period of time, for some of the bonds, right, there were no price. Okay, people are just so fearful, they just keep money. Okay, even the banks, right, they have money, they just keep the money. They don't want to even lend out. They don't want to do any thing with that. Okay, they just want to keep money. Okay, and even though interest rate was very low, low interest rate was very low, people were still very fearful. The bank just keep the money. They don't want to lend out. They don't do business with one another. Okay, that was during the 2009 period. Okay, and if you can plot out the interest rate was from here all the while it is coming down. Okay, How many of you have seen the post of my analysis of a bear market? Like how long a bear market usually lasts? How many have seen that? If you have seen that, type yes. If you have not seen that, type no. Then at least I can talk about it. How many have seen my Facebook post on the analysis of a bear market? That means how long normally it lasts, how big is the drop usually, things like that. How many have seen it? Type yes. How many have not seen it? Type no. Okay, no, quite a lot. Huh? No. Okay, who else? Because Dima is graduate, so you should know that. Okay. I just finished my okay, so a lot no, right? Okay, I'll make it very simple, very fun, very educational, so that and very logical. Okay, so that everybody can get value out of this whole thing. Okay, I'm not going to be too technical about the whole thing. I want to make it as simple as possible. Okay, so these are all factual. Whatever I share with you all, you can go Google and find out. Okay, so an average cycle, right? An average cycle in the stock market after the World War II is about 10.5 years, the average cycle. Okay, the up cycle is about 9.1 years. The down cycle is about 1.4 years. That's the average cycle since after World War II. Okay, so there's an average bull run and a bear market, bull market and bear market average cycle. Okay, so let's take a look at this chart right now. Okay, let's look at S&P 500. So from the peak, okay, from the peak, which is in here, okay, it's here. This is the peak of October 2007. Yes or no? Okay, October 2007 is the peak of the market then. Okay, prior to that, the market has been climbing until here. It went down. This was the crisis time. Okay, from the peak to the trough. Okay, how many percent did it drop, and how long is the drop? Okay, how much is the drop? Okay, so from here I measure it downwards. Okay, so until the down here, it is about 900 days. Is it 900 days? Oh, 500 days. Sorry, 500 days. Can you see below here? Maybe not so clear. This is 500 days. And the down move is 57%. Got it? Can y'all see that? If y'all can see that, type yes too. Okay. If you can see that, type yes. Clear, huh? Okay, so 500 days, about 511 days, and then about 11% down. Okay, that is the context of the bear market. Okay, so that is about 500 days and over 57%. Okay, this chart I do not have the older data. Let's look at this. Okay, it's the same. That one is CFD. That one is I think both are CFD, but that one maybe don't have the data. Okay, I want to show you now. This time I show you this one is about 500 days. Okay, this 500 days down. Okay, now let's look at .com. Okay, .com, after the .com bubble burst. Okay, and after .com bubble burst, this market came down. Okay, and in between we also had the I don't know whether you remember, in here we had a big event. You all know what's this big event over here? In 2001. What is that big event that happened? Anybody can guess? Okay, anyway, the .com bubble burst and then something happened. What happened during then? Here? Oh, nobody can guess. 911, correct. 911 happened. Okay, so 911 happened. After 911 happened, what happened to the market after that? after that, market correct, okay, and then the SARS actually came in like 03. Do you follow what I'm saying? Late 2002, and then it ended somewhere in July here. Okay, here the SARS officially ended. Okay, this from here to here was actually the SARS period. Okay, the SARS actually from here to here. Okay, that's the SARS period. This is the beginning, somewhere around here, late December, and then ended somewhere in July. Okay, you can Google all this information. Okay, but how much did this market drop? Then from .com, September 11, then SARS. Okay, how much did it drop? Okay, I will use the center one as the bar. Okay, you can also use the final one as the bar. Either case, okay, either use this one or the final bottom as the bar. But you can see over here it's about 900 days. Yes or no? And it dropped about 48%. Okay, so guys, this is bear market. Got it? We have a bear market when have recession. We have bear market. The magnitude is something like that. Over a period of time, 900 days. This is almost 3 years, okay? But this is quite long now, okay? And then the other one is about 1 over years, okay? This from here, 07, and then ended at March 09, okay? So this is about 1.5 years, okay? Then after that, the market start to rally from there. Okay, so right now, at this moment, where are we now? Okay, assuming that right now is a recession, okay? I think some of them already say we are in recession, okay? But let's assume that we are in recession. How much have we dropped? Okay, like wow, very panic, right? The whole market is like crazy, right? But how much did we go down? Okay, in reality, we went down from here down to here. Right now, I will say it went as low as 35%. Right now is about 25%. Okay, about 25%. And so from the peak until now, it's about 25%, and the number of days is only 41 days. Okay, it's only 41 days, and the market has dropped about 25% as of now. So assuming it's the bear market, assuming that it's another recession period, I think a lot of people may say, oh, recession coming and things like that, right? Assuming it's the recession period, then looks like it's going to last longer and it's going to drop more. Yes or no? Okay. So we'll say, oh, but the interest rate started to cut. You know, when they cut the interest rate, the market will go up. Is it true or not? Okay, so far, you all get this part so far? So right now, at this moment, we are only 41 days and 25% drop. Okay, we have 500 days, about 50% drop. The other one is about 500 days, about 50% drop. Do you follow what I'm saying? Right now, we are 41 days and 25% drop. Okay. I can see all your comments actually. Okay. And thanks for being here. Okay, I really appreciate you all for being. Wow, today got 300 people here. Okay, so but okay, so the next question is, Collin, but if the Fed, right, were to help us and start printing a lot of money, like now we got QE unlimited, right? The time we got QE1, QE2, QE many lah, okay? But now it's QE unlimited. Yes or no? Now it's QE unlimited. Does it mean after the QE, then the market will immediately go up? Is it true? Okay, let's take a look. Okay, because they always talk about, oh, don't worry, the central bank will prevent us from dropping. Okay, this all actually you can see from my Facebook also a few Fed rate charts. Okay, go to here. Okay, I'll just look at maybe the 10 years. Okay, Maybe I need to look at longer, 25 years. Okay, let's look at it. Let's look at this. Okay. Okay, let's look at this. Okay, so when did the in fact I can wait here. Okay, let me see if I can do it here. Compare with the Fed rate, Fed fund rate. Fed fund rate. Okay, never mind. Don't have. Okay, let me show you here. Okay, let me show you here. The Fed fund rate dropped, okay, from here in late in 2007. It dropped, okay, until maybe 2008 or 9. Okay, you can see from here 8 or 9. Okay, and here also 2000. Okay, it keeps dropping until here, right, about 2004, it reached the bottom and then start to recover, Can you all see that? Okay, so it doesn't mean, right, that once the Fed start to cut interest rate, that means the market will immediately shoot up. Do you follow what I'm saying? They are always slow. Okay, they are always slow. Okay, in fact, they are. When they start to cut, the market starts to drop. Okay, the more they cut, the more it drop. Okay, so you can see from here, right, all the period from 2007 onwards until about 2009. I think even after 2009, when they were cutting interest rate, the market was dropping. Do you have what I'm saying? Okay. Okay, so so in my view, okay, and it's only my view, I think we are still early in the recession. Okay, even though a lot of people say, oh, buy, now is the best time to buy. And frankly, you go and look around, you ask your friends and you go and look around, right? A lot of people actually are buying. Okay, a lot of people are actually buying. Okay, I met a reminder, right? They say in the brokerage house, there are people queuing to open an account to buy right now. Okay, you don't see this in bear market. Okay, in a bear market, people will hit stocks. People will not queue up to buy stocks. Okay, and then the other day I was servicing my car, then I took a bus, right? Then I saw in the bus, there's this guy in front of me watching YouTube video on how to trade stocks. Okay, young guy. Okay, in my view, this is not the normal bear market. Okay, in the normal bear market, people will start to hit stop. Think about it. Think about Bitcoin. You know, remember Bitcoin? Okay, 20,000, everybody rush to buy. Yes or no? Or clients call me, hey, Collin, can buy how to buy Bitcoin? When it was like $20,000. Okay, and then after that it crashed. Yes or no? When it crashed, what happened? You know, people in Korea, they smashed the computer. They so much hatred on the market. Yes or no? Okay, they were smashing the computer. They were just angry, right, with this whole thing. When it's like that, then maybe it's a bottom. Do you follow what I'm saying? Right now, I don't think we have reached the bottom yet. Okay, I may be wrong. Market may cannot shoot up. Okay, but currently this is my view. Okay, and the probability I will look at it is still like that. Okay, the chart. The current trend is the correct trend. The current trend is downtrend. I trade the current trend. Does it make sense? Okay, which also brings us to the biggest opportunity ahead, because we have, you all know, right? Eventually, this COVID virus will go away. Yes or no? Eventually, it may take a few months. It may take 1 year, but eventually it will go away. Yes or no? But after it go away, the money is still there. Okay, the cheap money is still there. Then we have another round of bubble again. Okay, it's always like that. Okay, it goes through that massive greed, and then it go to that massive fear. Okay, when massive fear, people smash laptop. Okay, frankly, I share with you all my personal story. When I was in 2008, 2009, I have another friend who is doing teaching people to trade stocks also. And what happened is then suddenly he stopped teaching. Then I said, hey, why you suddenly stop teaching this? Okay. Then he said, oh, what happened is one of my close friends in Malaysia actually committed suicide. And he said, I have enough. Okay. That is the impact, guys. Okay. That is the impact of really, really bear market. That's the impact of fear. Okay. Right now, I don't see fear. Yes or no? The day one of my traders sister's boss, okay, go into the stock market and buy until no money to buy. Because oh, now is the greatest opportunity right now. The boss go and buy stocks, and they made among themselves they were coming together and buy stocks. And these are new people in the stock market. Do you follow what I'm saying? These are new. It means they are new to the stock market. Okay, so the stock market is very interesting. Okay, the stock market is very interesting. When the market goes up, right, there are people open account. There are people who are opening account. Okay, when the market go up, they open account. Okay, but when the market crash, also got a lot of people go open account because when the market go out, they didn't participate in that up move, crowd. So they say, I'll run already. Never mind. Wait for the next crash, then I buy. Crowd. So when the market goes up, there are people opening account. But when market first crash, there will still be people who go and open account, go and queue and open account again. Do you follow what I'm saying? Okay, they will build a queue and go open account. It's go, oh yeah, I know I have the greatest opportunity because right now the market crash. Do you follow what I'm saying? But the problem is they come in too early. They don't have patience. They come in too early. And then with this kind of rally over here, they may be sucked in, you see. Let me see. They may be sucked in, is it? Because from here, right? From here to here, the market go up about almost 10%. They say, wow, market start to recover already. Do you follow what I'm saying? And then they say, oh, after the big crash, because in the news that there's a news of the big crash, yes or no? Oh, so they're going to open an account, and then when this push up, right, they'll say, oh yeah, end of bear market, no? And then they start to go in and buy. And maybe they even make money in the first part. Do you follow what I'm saying? Maybe they even make money in the first part. But eventually, because they're new, so they know they never see crisis before. Okay, they don't, oh, it's like that. Okay. I haven't smashed laptop before. I generally quite good temper one. Okay. Okay, so question Stephen asked, is that inflation? Actually, right now there is no inflation at all because everything is slowing down. Okay? Everything is slowing down. There's no inflation. In fact, maybe got deflation. Okay? Because why? Because even though they print a lot of money, okay, but they cannot no pricing power, right? Everything is like cheap, right? Correct. Nobody is spending money, right? Okay. Okay, I want to make it very palatable so that everybody can enjoy this. Okay, if I do too technical, Victor will be good, elite wave and stuff. But I want to make it palatable, logical, so that everybody can benefit from this. You got it? So far, are you getting it? We have talked about the average bear market. We talk about the participant in the market, okay, and we talk about general feeling. Okay, just go and ask around, go to the forum and find, are people aggressively buying stock? If they're aggressively buying stock, then maybe not the end. Okay. Okay. Okay, now let's talk about one more thing. Okay, let's talk about fear. Okay, let's talk about fear. Because what's the sentence that Warren Buffett talk about? What is the sentence that Warren Buffett talk about? Can you help me? He like to say this about fear. What is that? Suddenly I forgot. Be greedy when others are fearful. Okay? Be fearful when others are greedy. Yes or no? Have you heard this before? How many heard before? Type yes. Be fearful when people are greedy. Be greedy when people are fearful. Okay. Yes or no? Okay. Recently, people are greedy. Right? People are fearful, right? Yes or no? Okay. They say, oh, fearful, fearful. Go and buy now. Okay. They say, oh, fearful, go and buy now. But does it mean that once it's massive fear means the market will recover? Okay, now let's take a look. Okay, so right now we have over here I will just look at big picture. I can go into daily charts, but I just want to look at big picture. And let's look at all the fear area. Okay, the fear one. This is the fear. Okay. Okay, maybe I go in daily charts. Even more interesting, right? Okay. So this is even more useful, right, for your. Okay. So it may take a while to load, okay, but I think when you go in daily charts, it's even more interesting. Okay, so what is VIX first? What is VIX first? Okay, the VIX, right? The VIX, right, is like the premium people pay. Okay, make it simple. Premium people pay to buy insurance in the market. Okay, when it's very risky, people have to pay higher premium. Yes or no? Now you have a lot of health issue, and your premium must be very high, because you very likely to die, so the premium very high. Okay, so if you're very healthy, then the premium very low. Yes or no? Okay, so let's take a look at 08. Okay, let's take a look at 08. This premium, okay, this premium. I want to make it very simple. So what does this premium mean? So in 08. This premium started to shoot up. Okay, that is when Lehman Brothers first collapsed. Okay, so can you see here? This is like I think Lehman Brothers was around here. This is the massive fear. Boom, massive fear. From nothing, okay, then to massive fear. But from the period of massive fear onwards, this is daily charts, right? Daily chart, one day is one candle is 1 day. From this period of massive fear. Okay, this period of massive fear, how many percent did it drop after that? Okay, so this was the first massive fear. Yes or no? From no fear become massive fear. How many percent did it drop after that massive fear? Okay, so the market can recover after that massive fear, but eventually it dropped 100% again. You cannot see. I should read to you. It's another 22%. Do you all follow what I'm saying? So after the first massive fear, bam, Lehman Brothers collapsed. That was in 08, right? What happened is after that, the fear continued. So at the bottom of the market here, actually the fear compared to the initial fear, the fear is lesser, quantifiable fear. Yes or no? So this was actually the market bottom. It's actually lesser. Okay, is it only in this period of the time? The answer is no. Okay, when we go back to the past, okay, we go back to the past. This is again here. Okay, this was, I think, September 11 was here. Okay, this was September 11. Can you all see? After that, right? This was September 11. September 11 got massive fear. Yes, right? The massive fear, right? But after that massive fear, the final bottom of the market is not September 11. Do you all follow what I'm saying? Even though at the period of time there was massive fear, the final bottom of the market was actually after 03. Yes or no? So from here to here, when the first massive fear appeared, right? How many percent it dropped from here? This is the September 11. Okay, until here, right? It's another 18%, another 300 bucks. In fact, okay, let's look at the bottom, right? We want to look at all the bottoms. At the market bottom, okay, at this final bottom before it recover, the fear is actually lesser than in here and in September 11. Do you all follow what I'm saying? So it does not mean that once you have fear, means immediately rush in, don't care anything, and just buy. You got it? If you all understand, type yes. Because I sometimes feel like I'm talking to myself. Do you understand? Okay. Okay. So guys, it is not that like that lah. Okay. Sorry, I just highlighted your one. Okay. So it is not like that. Okay. It is if it's just like, oh, massive famous go and rush in and buy, then not the way lah. Okay. So Lina asks, okay, who want to know the best time to buy in a crisis? If you want to know the best time to buy, type I want. Okay, then I tell you all. Okay, this is foolproof one. That means back tested foolproof one. Okay, very easy one. Okay, close eye can take action. Okay, you all want to know how to actually more or less buy at the bottom. Must type I want lah. I work ma, then you all work also lah. I want to type I want, not me. Okay, type I want. Okay, so I tell you all a simple things that you can apply one. Do you follow what I'm saying? Something that you can apply, something that is simple, so that no need too many indicators, too many stuff. Okay. The easiest way to buy, right, is when the newspaper, okay, say we are in recession. Okay, do you follow what I'm saying? We are in recession. That is actually the best time to buy. Okay, when you see the newspaper, right? Okay, headline say we are in recession. That's the best time to buy. And because the economic cycle is always lagging, okay, the stock market cycle. Okay, like people are already anticipating with this coronavirus, things will get worse and things like that. Okay, so that's one way. Okay, look at the official news. If the official news there, headlines we are in recession officially. Okay, that's the best time to buy. Okay, and how long will that trough take? Okay, I would think that from the peak, right? That's now it's only how many days? Now it's only 41 days. And assuming that we are in a bear market, okay, the market will usually don't immediately, Fed come in and help us, no recession already. Unlikely, follow what I'm saying? Okay, in fact, all the numbers are not even reported yet, right? And all the results is not even reported. Yeah, we have some of the employment numbers, but it's not. We don't really see the impact of the results yet. Yes or not? Okay, so with all this measure, it's not in yet. Okay, so you can look at what's happening in the newspaper. If the newspaper says we are in recession, okay, then tell your friend, hey, now can buy. Okay, and usually it is not so fast. It will take a while. The average cycle is about 1.4 years. Okay, the average cycle is about 1.4 years. So right now it's not even years lah. Okay, this is one way to look at it. Okay, how to look at the market. Okay, another way to buy at the low price is in the bear market. If the stock market stop making new low, okay, like right now we are so-called a new low, yes or no? So if this low over here can sustain, that means from now onwards can sustain. That means the price doesn't drop below this low. Okay, can sustain about 3 to 6 months. That means that is the low already. Okay, let's take a look again. Okay, so during the bear market, right? During the bear market here, you see the low keep making a new low. Yes or no? from here, okay, let's say start from here lah, from March when the market dropped, January market drop, another 2 months new low again, okay, March low again, March another, June another low again, yes or no? June another few months, September another low again, October then another low again. But from here onwards, okay, from here onwards, you look at it 3 to 6 months. 3 to 6 months, March, that means June, July, okay, June. Did you make new low already? Stop making new low. Then you can question, okay, hey, maybe that was the low already. Do you all follow what I'm saying? Okay, so in 3 months, if the price stop making new low, that may be the low. Okay, so let's take a look at here again. Same thing. Okay, until what happened? Until the price stop making new low. From here, okay, July, September, equal low. September, February, equal low. Do you follow what I'm saying? From here onwards, 3 months later, June, hey, don't have low already. This price didn't go lower. Am I clear? So you look at now, okay, and look backwards and see if that low, right, is the 3 months ago, now it's not making the low, means, okay, more or less bottom. Some people want to be more technical. Okay, so I show you 3 ways, right? First way is you want to look at general newspaper. Newspaper say, oh, recession, you can buy already. Okay, second one is looking at low. That means you're looking at the price now. Okay, look at 3 months ago. Is the current price the lowest? If the current price is still the lowest, then no, not yet. Okay, after 3 months later, you say, hey, I saw the low 3 months ago. That means possible is the bottom. Got it? Okay, some people want to be more technical about it. Okay, then you can draw trend lines, you can use GMMA, things like that. Okay, I show you the last method. Last method is use a GMMA weekly charts. Okay, don't let look things very complicated. Let's look at weekly charts. Okay, the weekly charts, when the red lines stop dropping, can you see here in after .com, the red lines drop until here, stop dropping, start to go up. That's the time to buy. It can be technically like that also. So maybe from here onwards, start to go up. August, September, you know that, hey, the price has turned. From here down, price has started to turn. Okay, from here, August, you look backwards, 3 months, maybe in May is a low, not don't have new low. Its price is higher already. So you know that, hey, the prices will go up. Easy. Okay, similarly over here in the global financial crisis, similarly from here, okay, when this GMMA, okay, the weekly charts start to turn up, okay, January 10, okay, you look from here, last 3 months, is it making new low? No, making new low, okay, or it converge and turn up, okay, also can buy. Many ways to do it. Correct or not? Okay, so now let's look at it here right now. Okay, number one is the GMMA turning up. Haven't even turned down. It's on the way down. Yes or no? That's turning. Must turn down and turn up, then buy. Okay, so still earlier. Got it? Okay, it's okay to be lagging. Okay, Jimmy, it's okay to be lagging. Your objective is what? You do not want to buy at the lowest. Yes or no? That's not the objective of trading. Objective, Colin, I want to buy at the lowest point here. You know, not possible lah. Okay, so what you do is, you just find the price turn already. Okay, then from here you look back 3 months. Okay, is this the lowest point? No. Yeah, okay, buy. Do you follow what I'm saying? Alternatively, if I still want to do this webinar in the future, I will tell you lah. Okay, But I will definitely tell my graduates, okay? My graduates do webinar with me every week, Monday, okay? But have I shown you all some ideas? Okay, some ideas of how to look at bottom, simple way to look at bottom, okay? To see whether the market is turning up or down, okay? Of course, I can do things like trend lines and things like that, but I think this may not help everyone, okay? I can do trend lines and things like that, but some people may not understand all this stuff, okay? But I look at counting months, okay, like everybody can know, right? Everyone know, right? Okay, if you look at newspaper, everybody know, right? Okay, if you join MMA, maybe people will know, but in general, even the first two, I think it's good enough. Got it? You see, the market always got spillover effect, one. So you see, when COVID virus happened, right, and business get affected, they don't immediately say, "Oh, sorry, you are fired." Yes or no? Not so fast, because the government will come in and help. Yes or no? Oh, okay, I'll help you in this. So first, when COVID virus happened, okay, people will say, "Oh, business affected," but they don't immediately let the people go. Yes or no? Okay, but if this drag on 1 month, 2 months, 3 months, 4 months, it cannot sustain already. Sorry, I have to let you go. Yes or no? Okay, so then the person who lost his job and he over leverage, he go and buy car, go and buy 2 house, go and over leverage. They say, "Oh, now I lost job. How?" Okay, my 2 house or my expensive car installment now have to stop. Yes or no? And then what happened? Then I have to force sell my house. Yes or no? And then when you force sell the house, other people may get what we call loan recall. That means the bank say, "Hey, I think your house equity now not enough to cover for the loan. Can you please top up immediately?" Do you follow what I'm saying? Can you top up your loan? Because I think the equity of your house right now, you need to top up more money. The bank feel there's a risk. You need to put in some more money to pay off some of the loan. Then what happened? No choice, force sell. Force sell, what happened? Cash go down. The price go down. Price go down may trigger other people's mortgage too. Other people check, hey, now the price from 1,002 square feet now become 1,000 square feet, $1,000 per square feet, then 900, 800. Wow, then it may trigger other people's loan recall. Do you follow what I'm saying? That means once you force sell, then will trigger other people's force sell, then will trigger other people's force sell. This one will take what? Time. Crowd. Okay, it will take time. So it is not like immediate. Okay. This may affect US more than Singapore, because Singapore the government very good. Okay, Singapore, the government take care of its citizen. They make sure people don't over leverage. So people become smart. Hey, cannot buy residential. Then maybe I buy commercial. Because commercial is not under the ABSD and stuff, right? Then they over leverage again. Okay. So far, you're getting value. If you are getting value, type yes. Actually, I like to do this. The secret is I enjoy doing this. Okay. By the way, you all see the William Huang interview yesterday. Okay, Jonathan asked, does it work on all time frame? The answer is no. Okay, JMMA does not work on all time frames. Okay. Okay, so more or less I covered the market. I took quite a long time to go through this because I'm sure that not everyone look at my Facebook, so I just want to make sure that everybody got this. Okay, so summarize again, what did I cover? I cover about the length of the bear market. I cover about the amount of drop in the bear market. I talk about the economic cycle versus the stock market cycle. I talk about general consensus, that in the bear market, people are massive fear. Okay, people are massive fear. People lost their job. People are angry. Okay, people are angry really. Okay, now actually don't have anger yet. But if I keep asking people to short the market, people get angry. Okay, so in fact, our graduates has been profitable, yes or no? Okay, if so what I do next? Okay, so now next let's talk about, I think, do you want to look at the other index? Melina, the session is live, so it's on Facebook live, automatically recorded. Okay, so what this is on my timeline, right? So you go to my timeline, there you can see the Facebook live. Okay, so do you want me to go through the other markets? Oh yeah, I want to go to STI. Oh yeah. How many was here yesterday? Last week, sorry. How many were here last week? If you are here last week, type yes. Okay, so I have one challenge in the public group. When I tell you all, I'd rather not tell you all strategy, like how to trade and things like that, because I'm afraid that you all now do it. Okay, and say, oh, can short, then you just short, and no stop loss, no take profit, and things like that. May not be useful for you. So I just maybe share with your season. Okay, like, oh, now it's winter, now it's autumn, now it's summer. Okay, then you can hold it for long term. I think it's okay. Yes or no? But I like the graduates. Okay, graduates, I go into like 5 minute, 5 day, 5 day what to do, 1 month what to do, things like that. We go very into detail. Yes or no? Okay, in fact, I think your most of your short should be profitable right now. Yes or no? Okay, so so for the public group, I want to make it more big picture. Okay, I don't go into the small picture. But graduates, I'm right to say when you are in the SMT graduate group, I go specific. Yes or no? I tell you like 5 days, where's the entry, where's the stop loss. No, I tell you in fact, you all tell yourself. Okay, then I say, oh, correct, wrong. Okay, yes or no? If it is yes, type yes. Some of the graduates are here. Okay, Picker Tima, I know you. Okay, I go into the exact trade setup. If it's yes, type yes. Thank you. Okay, only Picker Tima type yes. Okay, but okay, so I go into smaller time frame. Okay, I go into the actual trade setup. Okay. So now let's go into STI. Wow, STI is very interesting. Very, very interesting. Okay, STI is very, very interesting. Take a look at STI right now. Okay, so I will go through slow. How many of y'all went through that long-term trend line of STI? How many of y'all saw that long-term trend line of STI? If you saw that, type yes. If you didn't see that long-term trend line, type no. Then I will show you what is the long-term trend. Okay, if you have not seen the long-term trend line, tell me. Okay, then I'll plot the long-term trend line for you. Okay. Okay, so Kelvin asked, right, in the midst of lockdown, will the program be delivered online? The answer is yes. Okay, if you want to find out about our program, right, you can go to this. Right now, everything is online. Online but live. That means I will do it live like this over 5 days, over 5 nights. Sorry, over 5 nights. I will go through with y'all. Okay, and it's part of a community. So like people like Picatima, all these are long-time graduates. Okay, it's part of a community. The thing doesn't end after the 5 days of training. Okay, it continue on and on and on. The webinar is every week. I've done the webinar maybe for the last I don't know how long. Okay, I've done weekly webinar, right, for at least quite a few years. Okay, So what I believe in is really community, build community, stay with your community, add value to the community. That's how you become successful. Okay, it cannot be you win, the trainer win and the graduates, the people in the graduate group lose. Okay, that is not my formula. I've been doing this for the last 12 years. Okay, so webinar I've not done 12 years. Okay, poor thing, the earlier graduates did not have this weekly support, but you can see this thing lasts from how long ago? 1615. I started at 15. So 1520, 5 years already. Okay, 5 years already. I do weekly webinar. Okay, so then I'll tell you what are the things to do. Daily swing short, daily swing sell means short. Okay, I think some of you all have. This is the weekly webinar. So we're done at Monday 10:30 a.m. and then by 12 p.m. you'll be here. Okay, so you have the course, which is now 5 days online, live online, and then after that the weekly webinar. And then we also have the use of the trading place, but now nobody use our trading place. Also live, and then you have the use of the software, which I actually didn't cover also. Yeah, so so sorry, just now graduates, just now I'll show you all that besides using the GMMA, right? Okay, you can also use just the S&P 500. You can use the Trader GPS. Okay, you don't need to draw the GMMA and all these things. Okay, too. Okay, so for graduates, you can just use the you can just use this. Okay, change this into weekly charts. Change this to weekly charts and use this to guide you. Okay, use this to guide you in entering and exit. So when to get in, when this thing turn, get in. This is long term. Okay, this long term, this will be your time to get in. You compare that with the GMMA, it's about the same price. Okay, then the other one here, this will be the time to get in. Again, we will look at the general market and things like that. Okay, so you can actually go to weekly charts, S&P index 500. It will tell you where is the exact point to get in. Okay, on top of that, we also have the weekly webinar too. Okay. Okay, so let's go back to the index. Okay, so let's talk about the how long this webinar will last. It's already almost an hour. Oh, time flies. Okay. Okay, so let's take a look at it. Okay. We have the Asian financial crisis. Okay, Asian financial crisis affected Singapore, Asia. It's very, very serious. Okay, it's very, very serious. Okay, for Asian financial crisis is very, very serious. Okay, then after that we have the SARS. This was the SARS. So you can see from SARS, right? From SARS versus the Asian financial crisis. This is SARS. Okay, this is 03. Asian financial crisis was in 1998. So 5 years later, 03. This was the SARS. SARS is also quite serious. Okay, it's something like now, but I think now it's even more serious than SARS. Because during SARS is last for about 7 months. Okay, from beginning to end. Looks like this thing may last longer than 7 months right now. Okay, and then after that we had the global financial crisis. That's when people say, "Oh, the end of the banking system." Lehman Brothers collapse. The end of the banking system. So during this period is higher than SARS, and during this period is higher than Asian financial crisis. Okay, and right now we are. So after that we move along. Okay, we did not make new high. Okay, very sad. Okay. I think one of the reasons why we didn't make new high is because of the government want to protect. Okay, government don't want bubble. Okay, so they want to protect the citizen. So they didn't have bubble. If you look at US market, okay, this 2007 high, okay, over here, if you look at this high, right, this is 2007. From 2007 on until 13 years later, we have not made a new high. Yes or no? We have not cleared this price. We have not cleared the price. But if you see, I apologize for graduates, you will find this one very boring. Okay, but I repeat this a lot of times, right? But for US market, this was 2007, and it has made like 1 time, 2 times, maybe 3.5 times the high of 07. You all follow what I'm saying? Okay, so this is STI versus US market. So US market really didn't go clear any high. Okay, for 13 years it didn't clear high, whereas S&P index has actually cleared like many high. Okay, quite a lot of high already, 3 times the high. Okay. Do you all see my comment just now? Error, never mind. Okay, but okay. So anyway, back to here, STI, right? STI is very interesting. If you join the Asian financial crisis, if you join the SARS, and if you join the global financial crisis, and you come to maybe around here, yes or no? Okay, so friends, we have Singapore market, we have more or less near crisis level already. Okay, it may hover here, but in terms of the level, we may have already reached the crisis level already. Can you all see that? Okay, so one question is, why is it possible that the market go lower? Like example, is it possible that 09 go lower than 03, 03 go lower than 98? In general, it's difficult. Why? Because of inflation. Okay, Singapore inflation, normally, let's say you talk about 3%. 3% very reasonable, right? Okay, 3%, 5 years is 15% already. Yes or no? Then here, 3%, 3%, up again. 3%, 3% up again. So here to here, right? It's already 13 years. Yes or no? So just 3% times 13 already must go up already. Cannot be everything remain the same price, right? Your kopio here and your kopio here and kopio here is different price. So right now, actually, it is at crisis, or more or less at crisis level. I wouldn't say it is right at the bottom, okay, but it is quite close. Okay, from here, what may happen? From here, what may happen is the STI may start to build a base, even though we have the US market maybe still be dropping. STI may be going sideways. Do you follow what I'm saying? But anyway, if you have time, I mean, you have holding power, 1 year, I think it's fine. Okay, if you have holding power, 1 year, you buy already, don't look, I think it's fine. You can slowly buy, okay, from now to the next 6 months, or the next, I think the next 6 months, you can slowly get in. Okay, we have more or less hit that level already. Okay. Why is it so? It's because, why is it that STI has hit the level, but US market has not hit? It's very simple, because Singapore very nice, right? It never go up, it didn't go up. So when it didn't go up, drop also cannot drop so much, because nobody over leverage, most of them are just not over leverage. Okay, so that's the thing. Okay. So Brian asked, why is the STI different? Just I mentioned that because US market and even Hong Kong market, right, they are not as efficient of doing this cooling measure, of controlling people not to over leverage. Okay, all the way from your car, you cannot over leverage. Yes or no? Car, I don't know what's the installment right now, but the loan right now, house, you cannot over leverage, and things like that. Of course, there are loophole, like you can buy commercial property and things like that. You can buy overseas property, but it is quite good cooling measure. Yes or no? I think they cool it 11 times or something like that. So because of this, people are not over greedy. Yes or no? So the industry also not over leverage. Okay, you don't have like a lot of bloatedness, okay, compared to the US market. Does it make sense, Gary? Saying that this, you have time to buy. So you don't need to buy Monday, okay? You have time to buy. If it touched, let's say 2,200 level, 2,200 level, within the next 6 months, buy a bit. But another thing is very important is buy already, don't see. Or if you buy already and scared, then sell, then wrong, okay? So you buy already, they say, okay, I'm buying the crisis level, this is blood on the street, I don't need to see, and then after that, just leave it. Got it? Okay, frankly, my job is not to predict. Okay, my job is to see what's happening and just trade. Okay. 2002 around 2002, 2200. Guys, don't need to be accurately must buy 2002. Okay, now it's 2450. Around there will be good. Okay. So Harlan asked, okay, let's keep this. How long should we do this? Well, now it's 1 hour already. Because after that, people may start to leave. After a while, nobody is here already. Okay, let's do it 1 hour, 50 minutes, Ken? 1 hour, 50 minutes, so we end another 8 minutes, okay? So at least we have some things. Okay, I'll cover the last question, and then we go into maybe some question answer. Okay, so one question we will ask is, what sector to look at? Actually, all this is on my Facebook. Okay, if you are not on Facebook, can't follow me on Facebook. Don't need to friend me because my friend list is full. Okay, my friend list is full, but please come and follow me. Okay, economic cycle versus stock market cycle. All this you can Google one. Okay, economic cycle versus stock market cycle. Okay, by now you know that I didn't prepare for this because it's all here. Okay, it's all here. Okay. So what sector to look at in a recovery? Okay, how many have seen this before? If you have seen before, type yes. If you have not seen before, type no. Okay. You have seen this before, type yes. You have not seen this before, type no. Okay, bro, I'm already your friend. Don't bluff. Okay, so let's take a look at this. Okay, by now I think you know that this one is I just picked I just searched from somewhere, but this is actually my slide number 1 in everything. Okay, so let's take a look at this. Okay, so we have the full recession, which is a lot of people know. You see, wow, we do this is very good, benefit a lot of people. Okay, so we have the economic cycle, which is the green color. Can you all see this green color line? Okay, and then we have the red color line, which is the stock market cycle. Okay, graduates, you all of course seen before. This is slide number 1, right? Okay, so economic cycle will go through full recession, then early recovery, then after that full recovery, and then early recession. Okay, stock market cycle is faster. That means it moves ahead of the economy. Is the market will bottom first. Okay, the stock market will bottom first. Okay, then followed by the full recession will happen. Do you follow what I'm saying? Market will bottom first, then full recession happening. When you have early recovery is when bull market happen already. And stock market will top first before the full recovery happen, and then go into early recession and then bear market, then back to here again. Any question? So the first chart, the takeaway is stock market is always ahead of the economy. The stock market will drop first, then later part will say, oh, we are in recession. Do you follow what I'm saying? But when you read news, when you watch Channel News Asia, when you watch CNBC, they always say opposite, right? They always say, oh, today market is dropped because the latest GDP came out and we are now in recession. No, the stock market already beforehand already dropped. Make sense? Okay, so what I want to share with you all here is this one. Stock market move ahead of the economy. The property market is actually following more of the following more of the stock economy. Okay, you see the property market, it is more tied towards the economy rather than the stock market because it's lagging. And also because when people buy a house or people sell a house, it's tied to what? It's not really tied to, some is tied to the stock market, but a lot of time it's tied to, can I pay my installment or not? Yes or no? If I can pay my installment, okay lah. If I lose a job, cannot pay installments, jialat lah, crap. So it's more towards the economy. Okay. So what I want to share with you all is here. Okay. This part. Okay. So right now, where are we? Do you all think we are in full recession, early recovery, full recovery, or early recession? Where do you all think we are? Are we in full recession, early recovery, full recovery, or early recession? Which one do you all think we are? Come on, answer quickly. Market is closing soon. Okay, here a recession. So we are in bear market. Bear market. Okay, so look forward here. Bear market, then full recession. Yes or no? Full recession. People lose job. People jialat already. People are down already. Market bottom. Yes or no? Have we go into that yet? Not yet. Still not yet. Okay. So what are the sectors to look at right now? Okay. So you look back upwards, right? Okay. So okay. By the way, this is not like one line and switch to the next line. This is the it may be shades. Okay. So what are the sectors to be in right now? Okay. Staples. Okay. Like your dairy farm. Okay. Like your Sing Shop. Okay. Staples. Okay. Things that you need to use even in the COVID virus. Staples. Okay. Services. Certain services like Wi-Fi, things like that. Okay. These are the more defensive sectors. Okay. Utilities. You still need to have your electricity, water, and things like that. These are the sectors to be in. Okay. These are what we call the defensive sectors. Excuse me. These are the sectors that generally pay dividend. Okay. Then going forward, when the market bottom, going forward, haven't bottomed yet. When the market bottom, cyclical, then it's finance. Okay. When people lose their job and people all are suffering already, and people want to restart business. Okay. The first thing they go is to go to the bank. The bank will give them financing. They'll start their business again. Then go into cyclical. Then go into technology. These are what we call the enabler of business. They enable the industry. Okay. And enable industry. The actual factories. Okay. Then we go into the industry itself, the factory itself, and the business itself, and then consume energy, then go back here again. Okay. So what sector to be in right now? Depends. Okay. You are right now in a bear market, then these are the three sectors to be in. You're forward looking, then maybe not now, but in the future, maybe 6 months, then we look at this. Got it? If you all get it, type yes. Okay. Revision for the rest of the graduates. Okay. Okay. Banks don't so fast. Bank must wait. Okay. If you want to see this part, also is useful. These are seasons, guys. These are the season in the market. Okay, not like today, tomorrow kind of thing, but these are seasons. Okay. In early recession, consumer expectation is falling sharply. Industrial production is falling. Industry is peaking. Okay, now because they are reacting very fast. Okay, in fact, it peaked already. Then it start to fall. Yes or no? Peak and then start to fall. And then we have the U curve, flatter or inverted. Flatter or inverted actually was here already. Okay, so they peak and then very quickly they just cut. Okay, very fast. Okay, saying that, right? Any questions so far? So much more interesting. You make it better than a uni finance lecturer. I don't even have a degree. Okay, anyway, not important. Are you all getting value so far? Okay, I don't want to make it too long, because if I make it too long, then people will get bored of me. Okay. Okay, so three interesting things, three trading opportunity, how you can position yourself. I'll share the three interesting opportunity. First, if you are short term, now before the market before the market bottom, shorting opportunity. Okay, but you must know how to short. Don't anyhow short. Okay, if you're in our graduate school, we teach you how to short. Now to the next 6 months, that is the opportunity. Okay, then second opportunity is when the market bottom. When the market bottom, we have COVID virus, no more in the COVID virus, and plus on top of that, we have massive amount of money in the market. Okay, that is the second part. Okay, you can actually buy good stuff, STI, even the S&P index. Okay, these are the good thing, but maybe not so fast. Okay, but you want to take a look at that. Okay, the third is really into the sectors. Okay, right now we are staples, services, utilities. Going forward is finance and technology. I am still bullish on technology. Okay, I'm still bullish on technology, but maybe not now. Okay, but technology really become useful right nowadays. Okay, like Zoom. Zoom recently got some scandal, but generally people are using technology and people are paying for technology nowadays. Okay, different from the .com era, different from this now technology is really things that add value. Okay, so I think going forward in the next cycle, right, should also look at things, sectors or stocks that are like that. Okay, those are things to be in. Things that you should not be in, I already mentioned this before, is like energy. I think now is forget about energy. Okay. Okay, so one last thing. Okay, for those that are not in our community, want to join us as a community, come and join us. Okay, but if you're in the community and you have benefited, okay, type yes in the chat box. Okay, if you have benefited, type yes. Okay, at least you encourage those that are still blur out there, right, to come and join us. If you have benefited, graduates from our community, type yes. Okay. Okay, you have a question, Okay. Thank you, Jia Jun. So like one. Okay. Chun Lei, Pikatima, thank you very much. Facebook. Okay. If you're already in the community, okay, just type yes. Encourage those that are lost. Wow, the day I heartache. Okay. I met one, I cannot say guy or girl. Okay, let's say guy, okay. And he lost his own almost all the savings. Okay, it's really sad. Okay, I was so encouraged. I said, okay, never mind, I will help you. And please don't everybody do this. Okay, but I say I will help you and see how I can help you crawl this thing up. The good news is you can make back the losses. Your life saving you can make back. The bad news is you cannot be eager to make back now. Okay, that is wrong psychology. Okay. Okay, so okay, some thanks for your yeses. I really appreciate all of your Edward, whoever, the old graduates. I want to appreciate you all. Okay, before I end, wow, so many yes, wow, very touched. Okay, so before I end, technology sector is similar to the finance. Okay, so other finance, cyclical, technology. Do you follow what I'm saying? That would be the thing. Airline sector right now is cyclical. Okay. Simon, airline is cyclical. Need to wait. Wait for this virus over already, then come back again. Okay? Cyclical. Okay? Got it? Facebook actually essential, but Facebook make money from ads. So actually the spending of ads has been dropping. Has been dropping. Okay? So if not, then follow me on Facebook. Okay, if you have not joined, go and join if you are not joined, go and join this group. Okay, this group is called Trading Stocks in US Market. And some of you are here. Okay, you can join this. Okay, and really my life goal is really to build my community. Okay, that is my goal. Okay, and I think right now it's even clearer is not only to join my community, but to get result. I think it's even clearer right now for me. Okay. Difference. Okay. So if not, because there's other questions again. If not, you can post it in this group. Okay. If I'll try to answer them. Okay. So thank you very much. Okay. I hope you enjoy this. If you enjoy this, type yes, then I do it again next time. Okay. Ego guy, right? Okay. If you enjoy this, I will do it again in next week. Friday, I will do this again. And if you can get value out of it, very good. Okay. I think quite a lot are not graduates. Sometimes I say, wow, so many no. Okay, so quite a lot are not graduates actually. Okay, so if not, then thank you very much. Thanks for joining me. Okay, see you again. Bye bye.